Okay, so once again, welcome to Tax Talk with Corey. My name is, well, Corey, I guess. And I am with the SBDC. I think most of you know me. I believe all of you have been in on these tax talks previously. And I just wanted to show you a little bit about the SBDC that I may not have covered previously. And when you take a look at this bubble here, you'll see all of the different services that we have to offer. And if you find something there that you're interested in talking about, even after I'm done with my little intro about estimated income taxes, then we can talk about any of these things. They don't even have to necessarily deal with taxes. As long as it deals with business, I'm good with talking about it. So you'll see there are many different services for those that are just opening a business, or those that are in that growth or maturity or decline stage, as well as that renewal stage. And at some point, businesses do start talking about selling their business or just closing it down because they're going to retire. We call that exit strategy. And so we can also assist with exit strategies as well. And really, it takes planning if you're looking at exiting out of your business at some point. One quick example is, as a business, many times we like to try to keep our bottom line, our profit kind of low. That way we're not paying much in taxes to the government. However, if you're looking to sell your business during your exit strategy, you want your sales for the last 3 years and your bottom line for the last 3 years to be really as high as possible, so that you can ask more for your business, and so that the banks are more inclined to loan the buyer the money if your business shows that it is a very profitable business. So you can keep your bottom line as low as you want until 3 years before you're ready to sell. Then you want to make sure that you increase that. Okay, so I just want to make sure everybody is aware. I mean, when you did register for this at one point, or when you got signed in, at some point it should have told you, but just in case it doesn't, any tax advice that I share with you, it reflects my personal professional judgment based on our understanding of the facts provided to us and on current tax law. The SBDC is not responsible for misinformation, as this is a service offered at no charge to entrepreneurs and business owners. There's your legalese for the day. We just want to make sure that you are aware that I'm not your accountant. I'm not doing your taxes. And when you ask a question, I'm just trying to come up with the best answer at the time with the accounting experience of over 15 years that I do have. I like to feel confident that I'm answering your question, but there's always, more to the story than what I'm being, opened up to in order to answer those questions. So let me, what we're going to talk about here is, sorry, I got to move this over here, is your estimated income taxes. And we're going to just talk about this briefly, and then we'll open this up for any questions and answers, or questions that you might have. So I know I've talked about this in previous months, and maybe that's even one reason why people didn't come today, because they saw that this was the subject. And this is one that can be really difficult, trying to figure out if you have to make estimated payments if you try to do it yourself. However, if you rely on your accountant, and assuming you have a good accountant, right, then they will take care of this for you, and you don't have to do a whole lot of worrying about it. The brief summary of it is that when you go in to have your taxes done with your accountant, if you get to a point where you're now owing money to the IRS, to Pennsylvania, to your local taxing authority, then your accountant will end up automatically creating for you vouchers to be paid to federal, state, or local, and then your accountant will give those to you all 4 quarters and say, here's who you write the check out, there's the dollar amount, here's the address, mail this in by the due date for each of these quarters. And then as long as you do that, that will be basically paying ahead on your taxes, so that at the end of the year, when you go back to your accountant the next year, you hopefully won't owe a whole lot of money. You know, I mean, if you make a ton more money than what your previous year was, then yes, you owe more money. But the idea is to help cushion you at the end of the year. And I have some people that'll be like, you know, well, I just want to just pay it all at one time at the end of the year. Understand that if you wait till the end of the year to pay it all, then you can be penalized by your government as well. And in my opinion, I don't want to pay any extra to the government than I have to, especially in today's cost of living, right? So the idea is to pay as little as possible. So send in these quarterly payments. Then at the end of the year, if you paid in too much, you'll get some back. If you paid in perfectly, which is like guaranteed you won't pay in perfectly, then you break even. Or if you still owe money at the end of the year, then you make another payment at the end of the year as well. As a business owner, this becomes a norm for us because we're not working for an employer other than our own business, and so our own business and me as the owner, I have to pay these taxes. Versus if I go out and I work for Sheets, then Sheets will withdraw from my gross pay all of these different taxes that are owed to the federal, state, and local government, and they pay them in advance for me, so that at the end of the year, hopefully I break even or get a refund or something like that. Okay, so what you see on the screen right here is the form for the 1040. Okay, that is your federal tax return. At the very bottom of this is where we actually see the voucher. And again, your accountant would end up filling this all out for you. It'll all be typed right in there. You won't have to do anything. And the dollar amount will be typed in there as well. Okay. So the due dates for the very first one is due April 15th. Makes sense, right? January, February, March, end of March. So it comes due in April. Okay. We understand that one. Now it gets a little different though. When we go to the second quarter, which would be April, May, June, logically speaking, but then you have the IRS that says, nope, it's due June 17th. So it's really only for, in a way, January, March, April, and May. Okay. And then you're paying in for June. Then this next one is September 16th. So again, it doesn't follow the quarters like you would think it would. Finally, and that's up here in this corner, finally, and I should be sharing my screen. Hopefully you all can see that. I'm not sure. Nobody said you can't see my screen. Oh, you don't see it. Is it just me or others too? Wow, y'all being so quiet. There you go. Sorry about that. Okay, I got to start all over then. I was just up here is all I was at when I was talking about the federal form, so I do apologize. You should be seeing my screen now. And then I went to the bottom of this document to show you these voucher forms. And so in the upper right-hand corner is the due date for these forms that I was talking about. So that one follows the first quarter. And then when we go to the second quarter, it doesn't follow. And go to the third quarter, it doesn't follow like the calendar quarters. But the fourth one, it does, which is so strange, right? The first one and the fourth one does. So I'm sure there's a reason for it. Never looked it up. Doesn't really matter to me. The IRS says this is when they're due, so you just pay. You don't need to worry about the reasoning behind it. But this is when the fourth one is due. Now this one here is kind of a hard one because you're just rolling into the tax season of getting your tax return done. And if you end up owing more, even after you made these 4 payments, if you still end up owing more for tax year 2024 that we're currently in, then you got to come up with that money. And in addition to that, you got to come up with the first quarter of that next year, which is due April 15th. So it can get a little tight there in January, February, March, April area. Best thing for you to do is when you're making the money throughout the year, make sure you're setting aside. I have people all the time ask me, how much should I set aside for all of these different taxes? And I would suggest, roughly 30%. If I was to throw out a number, that hopefully would cover, federal, state, local, and your self-employment taxes. Now, of course, that really differs depending on how much you're making as well. The more you make, the more you're gonna have to come up with. The less you make, the less. But 30% is a pretty nice number to go by. So then, um, you might be like, how is this calculated? And I do believe we looked at this previously as well. Um, and in previous sessions, we've talked about, sole proprietorships, partnerships, LLCs, S corporations, and how they're taxed. So you've seen a slide like this previously, but let's specifically talk about the self-employment taxes. So you already pay your federal, your state, and your local, but now you have these self-employment taxes that you have to make as well. And this calculation goes into the number to figure out your estimated payments to the federal government. So whatever your profit might be for the quarter, if you want to say, since we're making estimated payments, so for the quarter, we then use this calculation that the IRS comes up with again. Okay, it's just a standard calculation by somebody sitting in an office with no windows. And then this is the actual self-employment tax, the 15.3%. That is your Social Security and your Medicare tax. When you work for Sheets, half of that is paid for, half of the 15.3 is paid for by your employer. The other half is paid out of your paycheck. You, as a small business owner now, you have to pay the employer and the employee side of the self-employment tax, and that adds up to 15.3%. Now, you do get a deduction for half of that earlier on your tax return. So you have all of your income, on your 1040, and then you have some deductions. One of those deductions would be the self-employment tax deduction, okay, of like 7.65%. And that subtracts away from your income. And then after you take your income minus those deductions, the IRS calculates what your tax is, your federal income tax, not self-employment, still your federal income tax. So then you owe that federal income tax that the IRS calculated. In addition to that, they add your self-employment tax to it. That is the entire 15.3%. In this case on the slide, it's $7,065 is added to your federal income tax. Okay. And you're going to owe that entire amount. So that's where these estimated quarterly payments come into play, is to help you pay this large dollar amount throughout the year. And by looking at this slide here, if you look over on the right-hand side, you'll see there's federal income tax of $35.92. And then there's this $7,065. So add that together, that's over $10,000. That's what you'd be paying in on your federal vouchers. Now your Pennsylvania, you're owing $1,535 at the end of the year. So as an accountant, you would be told to make these quarterly payments to Pennsylvania. Same thing with the local. This is a large enough dollar amount that your accountant will have you sending in quarterly vouchers for that as well. So what I did here was I just did a quick internet search of IRS 1040 ES. That took me to the 1040 that I was able to click on. There is a lot of instructions here. I mean, there's like 12 pages worth of information here. Again, I just suggest that your accountant does it for you. I don't see any reason why you need to do it, why you need to read through it and do the calculations, because there is a form here that you can fill out and try to determine your own estimated taxes. But again, your accountant should do that for you. Pennsylvania, again, I did an internet search for PA 40 ES, and that gave me this result here. And it has the voucher right there. But again, your accountant will fill this all out for you, give you 4 of them for all 4 quarters for you to send in. And then local, depending on whether you are Berkheimer or Keystone Collections Group, or a different one, but those are the 2 that I'm aware of. Berkheimer has its own form, and Keystone has its own form. So your accountant will have these ready for you as well if they are needed. And you feel free to say, hey, do you think I need to make quarterly payments? And during tax season when they're doing 1,000 tax returns or something, maybe that they're human beings, so maybe like yours got you know got through the system, and he or she didn't catch that. Oh yeah, they should be making quarterly payments. So if you even ask your accountant, then they can look into it and have further conversation with you about it. Um, uh, what I want to. Oh, so these can be paid online as well through the IRS. You are able to set up your own account with the IRS so that you can see your past tax returns and things like that. And you can also make your payment online. Now, if you pay with like a credit card, you're going to get charged a fee to do that. So to me, it's not worth it. You can have it automatically withdrawn out of your checking account, or you can send in a check, whichever you would desire. At least with the IRS, I know you can make payments by phone as well, but it's probably going to cost you because you probably have to pay with a credit card. Pennsylvania, you can do it through Pennsylvania's MyPath website, and so you can have your own personal MyPath where you can see your past tax returns as well and make the payments online and have it automatically withdrawn out of your checking account. And then finally, with Berkheimer and Keystone, you can set up an account with them so that you can make these payments as well. Okay, I think that's about everything I wanted to cover there. I just know a lot of people do have questions about it, and I think what it is, and maybe it's because like my accounting brain, maybe I'm taking it for granted. A lot of people are scared. They hear about having to make these quarterly payments or something, or these estimated payments, and like, do I have to do this? Do I not have to do it? And although they make it complicated with all the instructions that they provide, overall, you should be going to an accountant to have your taxes done, and your accountant should be taking care of this for you. One last thing I did want to show you, coming back to this screen here, was the sole proprietorship. If we come to the S corporation, which we had talked about in a previous session, if you were with us, as a shareholder of the S corporation, you receive a paycheck from your business, and so you already have federal, state, local income taxes withheld from your paycheck of 35,000. Plus, you have the down here, I guess, because you're the officer, you have the self-employment taxes withheld as well. And then I mentioned earlier how the employer pays half of it. So your S corporation would actually pay the half. And then this part from here down is like getting a paycheck from Sheets. It's the same thing. Now you come over here and you have this profit of $15,000. Now, if that was your only income you had, if you didn't work anywhere else, or you didn't have a spouse that worked anywhere else, and this was the only income you had, was the $35,000 paycheck and the $15,000 profit at the end of the year, you'll see here this $15,000 profit. I made some assumptions, but your federal tax is only $40 in this example, and your state income tax is this amount in this example. So if you'd only be owing $40 to the federal government, you wouldn't be making quarterly payments. That'd be like $10 a quarter. There's no need for that. This 460, yes, I would be having you send in quarterly payments for that 460. The IRS likes to penalize you if you owe more than $2,500 at the end of the year. Pennsylvania likes to penalize you if you owe more than $250 at the end of the year. But there are more rules involved with the quarterly estimated payments that we're talking about. So your accountant again looks at that and makes sure that you send them in when necessary. But looking at this example, I can tell you, federal, yes, federal, no, state, yes, and then local would be 1%, which in this case is $150. So I would say no, I would not worry about sending in local estimated quarterly payments. Okay, so I am going to quit sharing. And I do apologize at the beginning how I was not sharing that with you. And I'm going to open it up to questions now. Again, it may pertain um, to what we just talked about. It can pertain to anything business in general. And I will bring up this slide here again, since it might get you to think about some questions that you have. So Tammy, I know earlier you said you didn't have any questions, but maybe at this time you do have questions. So I just wanted to open it up to you first, since you made it in here first.
Yeah, I put it in the chat. My only question is, does the localities have an amount before they start charging a penalty if you don't file quarterly?
I have never seen one. I've had clients send in larger dollar amounts, like $1,000 at the end of the quarter, and I never have seen them come back and say, "Hey." And normally, people say like, "What's this I got in the mail? I don't know what this is. Should I pay it?" And I've never seen anything like that. So I'm sure they have some rules on it, but I've never seen it, so I haven't really worried about it. With that said, though, when I've seen a person get up to owing like $400 normally, $100 a quarter, I normally would have had them do quarterly payments for that.
Okay.
I really don't know if they'd get penalized for $400, but it's just that I think it's a safe route to go.
Yeah. Okay, thanks.
You're
That was
welcome.
really my only question.
Okay. So
Thank you.
you're welcome. So I was trying to bring up, there we go. Let's see here. So we have Georgina, John, and Rose. So if one of you want to unmute yourself and ask your question, go right ahead.
I'll start. I apologize if this was covered in a different tax talk, but I often get this question, like if someone's starting their business and they're like a single member LLC, I've always told them you report that any monies that you make from that business on a Schedule C on your regular income tax. But then, I get a lot of questions about taxes, and a lot of times small business owners can't really afford an accountant, especially right out of the gate, because they can tend to be pretty expensive. So does the Schedule C automatically sort of account for your FICA, Social Security, Medicare tax obligations, or should you be filling out a separate form as well? Like they're not necessarily getting a regular paycheck from their business. They just, they're working their business, and then they come to, and they're like making a profit at the end of the year, and then they have to report that income. Can you speak to that a little bit?
Yeah, absolutely. So, one, yeah, all questions are open to be asked, even if they were asked previously. Like I know some of these people I've recognized the name, have been with me almost every time we've had this. So any question is open today. As for a single member LLC, it is just by default, it is set up as a sole proprietorship. It's an LLC, but for tax purposes, it's taxed like a sole proprietorship, which means that it goes on to a Schedule C, as you mentioned. So if I come back to this slide here, which is exactly what we're talking about, a single member LLC is exactly this slide right here. So let me go down through it. You have sales of $100,000 minus expenses. We're just looking at this for a 1 year time frame. And then your net profit is $50,000. And so on the $50,000, I like to come up here to the right first, because every one of us pays federal income tax, state income tax, local income tax. We're kind of familiar with that because we do that personally every year. And that's exactly what's being calculated right here on this $50,000. So you'll see that as just an assumption based on 2024 tax brackets. If you're a single with no dependents and no other income whatsoever, then your taxes would be federal, state, and local, as you see there. State is a flat 3.07%. That's easy to calculate. Local is a flat 1%, so that's easy to calculate. It's the federal which is more complicated, and that's why we have this little paragraph right here. So then, coming down to the bottom left on this $50,000 profit at the end of the year, this is the I think you had mentioned the FICA. This is your Social Security, your Medicare tax, is what is considered self-employment taxes for a business owner. That's your Social Security and your Medicare tax. And that's the calculation there based on the $50,000. That 92.35% is like just a standard. It doesn't change, okay? The 15.3 doesn't change either. So you just do that equation based on whatever your profit is, and that will tell you what your self-employment taxes are. So then all of this goes on to your Form 1040, your personal tax return. Of course, with the 1040, there are all kinds of other schedules and forms that help feed into your 1040, just like the Schedule C, okay? As you mentioned, the Schedule C reports your income minus your expenses. And then whatever that profit is at the end of the year, that goes over onto your 1040 tax return. So there are other forms by which you have to fill out to calculate your self-employment taxes, and that's where, again, you really should have a program do this stuff. I mean, I'm all for do it yourself. I mean, that's the world we live in today. But when it comes to doing your taxes, you at least got to pay for a program to do it for you.
Oh yeah.
Yeah. And I know I talk a lot. If this is your first
No,
time,
it's good.
you'll find I'll take your question. I'm going to really add on to it. And so, you can do like TurboTax or something like that. But I almost guarantee you that you'll pay, because you have a small business, you actually have to pay to do it via TurboTax. And so I like to tell you to go out and find an accountant to do your taxes, because a software program, especially now with AI, it's smart, but it doesn't have the human brain still, and the human brain can look at what's before it and make the best choices for you. One last thing to finish this up, if I hopefully am answering your question, but the one last thing is that in looking for an accountant, yes, there are some really expensive accountants out there. H&R Blocks and Jackson Hewitts are known to be pretty expensive. If there's somebody on here from one of those places, you can tell me that you disagree. But they normally seem to be pretty expensive. They seem to be almost comparable to certified public accountants or CPAs. And so my suggestion, not that I'm trying to take business away from anybody, but I'm a cost saver as well. And so if you can find an accountant who has business tax experience, like they can do a sole proprietorship, they can do an LLC tax return, and they understand what they're doing, then I would suggest finding a if you're trying to save money, because that was something you brought up, was not having a lot of money initially, is kind of stay away from the box store, H&R Blocks and Jackson Hewitts, and stay away from the CPAs. Just find the general accounting firm without those two designations, and most likely their tax return and their service will be less than those other ones. I'm not sure why H&R charges as much as they do, because they definitely don't have most of them don't have their CPA license. I understand why CPAs charge what they do, because they have these 3 letters after their name. But the general accountants without that CPA designation, if they have the experience, they can be just as smart as those CPAs are out there, but they charge less money. Okay. Did that hopefully answer some of your questions?
Yeah. So if you were a small business and you were sort of taking a salary per se, is there any difference there? Or it's like, well, that's because I know a salary is not considered an expense of the business, right?
So you're still talking about a
Yeah, like a single member LLC, or maybe a husband and wife team or something like that. They're making money, but they don't write paychecks to themselves. They just take money, each week out of the business. They account for it, but they're not writing a paycheck per se.
Right, exactly. And this slide here is what they need to be trying to calculate based on what they feel their profit is going to be.
Okay.
So this $50,000, that's a great question. So as a sole proprietorship, like the slide you see in front of you, and there's $50,000 left over at the end of the year, the people you're talking about, or yourself, whomever you're talking about there, if you're just taking out like an amount every time out of your business, you just said, it's not an expense. So maybe from this bottom line of $50,000, maybe you're taking out $40,000, and your checking account for your business only has $10,000 left in it. Well, even though from even what you said, even though they took out $40,000 from this business, it was not an expense for the business. So they're still left with this $50,000 that they have to pay taxes on. Even if they took out every penny from their business to pay their personal bills, they still have to pay taxes on this 50,000 because, as you said, it's not an expense for their business. So this is the taxes they're calculating. And therefore, if it's somebody that's just starting their business, then they would be really good, really smart to figure out what these quarterly payments should be, so that they can be prepared at the end of the year of not having to owe in a lot of money at the end of the year. And so, like, say like the SBDC, your local SBDC, wherever you might be at, they're not going to do your taxes for you. However, if you can find someone like myself that has some accounting experience, I'll try to come up with these calculations for you, since this is like your first time, and you're trying to just be prepared for when you go to your accountant at tax time. But then after that, your accountant really truly should keep an eye on that and take care of that for you, that you shouldn't have to rely on the SBDC to do the calculation. But all this information is available online, so it's not like it takes a genius to figure out what the taxes would be on $50,000.
Okay. Great. Thanks.
Great. Okay, we're going to go on to the next person, but when we make our rounds, if we still have time, then I'll be glad to answer more questions for you, but because those were excellent questions. What about John, Marley, or Rose? Do you have, let me see, John, if any of you have any questions, unmute yourself, you three, John, Marley, or Rose. But John typed in the chat here, will the slides be emailed to attendees today, or perhaps available to download from the SBDC Clarion website? They are great examples. Okay, so what I have to do, okay, what I was going to say, yeah, I'm going to email them to you, no problem. What I'll have to do is give you my email address and email me, and then ask for the slides from the tax talk, and I'll email it to you. I won't be doing it today because as soon as we end at 12 o'clock, I have to like run out of here to a client meeting that's a half hour away. I just put my email out there for everybody to see. Feel free to email me asking for these slides, and I'll email these slides to you. Also, if any of you are at the initial stages of starting a business, or kind of just started your business in the past year or something, if you have not attended a first step webinar, then it would be good to sign up for that. So if you go to our website, then you can sign up for one of these trainings, and we would be more than glad to teach these slides. I'm going to email to you, teach these slides to you, so you can learn from it here. And I'm going to put the link for that in here as well, in case you want to sign up. But that link there I just sent you, looks like it'll show you all of our trainings that are coming up that are currently scheduled. It's updated whenever new ones are scheduled. Okay, so John said no questions for him. And I lost who my attendees are here. So there we go. So if anybody else wants to unmute themselves, feel free to and ask your question.
All right. Hi, this is Rose speaking here.
Hi, Rose.
Hi. Okay, so thanks for that, because I was gonna ask a bunch of first step business owner questions, but since I didn't attend that one yet, maybe I should just wait till I do. I was gonna ask about deductions for businesses. I wanted to know if we can come to you for taxes as well. Again, you didn't mention if you had like CB at the end of your name, so you'd be expensive or not, like you mentioned earlier.
Yeah, yeah. Okay,
Uh,
so let me gonna do a search on Google. I think you can still see my screen. Let me see what you see here.
yeah.
Yeah. So I'm gonna do a search for IRS schedule. Oh, there it came. Schedule C. And I'm gonna find a form to click on here. And the reason I'm going here is because if you're looking for like what kind of deductions and expenses you can write off, this kind of gives you an idea, all of these different categories right here. So if you do this search at, back at your office at home and take a look, anything you see here, it normally is a business expense for you. And the way I tell people to think about it is if you're buying something or you're writing out a check or you're paying for something and in your mind that's a business expense, then it's a business expense. If you have to start like kind of like thinking like, can I make this a business expense somehow? Then you're probably looking at a personal expense. There are some ways to make sure that you are getting getting the best deductions that you can get. So as an example, the car and truck expenses. When you travel from your office, whether it be at your house or at a physical location, when you travel from your office to the local office supply store and back, you can track those miles. You can either have a little book in your car to write down the miles on your vehicle, or the easiest way is you just go on to the internet and go to like Google Maps and put in your starting point, your ending point, and make it a round trip back to your office, and that'll tell you the miles. That's the miles you get to write off. Now you do so you'll get a deduction for those business miles. There are some ways that you can, maybe, run to town. Like I live in rural Pennsylvania, so it's like, at least 30 minutes to the next, little bit larger town than the little community I'm in. And so maybe while I'm up in that town, maybe I'm gonna, I need to run to the office supply store to buy a case of paper, but I also, while I'm up there, it's like I'd be crazy not to go over to Walmart and pick up some, makeup for my daughter or something like that. So you can't write off all of those miles, but you can still, do your Google Maps from your office to the office supply store and back. And then you're not counting any of those other extra miles that you went to the grocery store and things like that. So that is a legitimate business travel that you did up there. So if you can try to, when you go to town, try to do more than one task, multitask, right? Then you can get some business expense out of that. Now, something else that a lot of people don't do this, so a lot of small businesses don't do it, is you track your business mileage throughout the year, and you get an expense on your tax return, which is great because it brings your income down so that you're not paying as much in taxes. But how many of you actually, take the money out of your business as when you are tracking your mileage? So track your mileage, figure out what that deduction is every month if you want to, or just once a year, whatever. But like whatever that mileage deduction turns out to be, like literally take the money out of your business, and that is money that you don't have to pay taxes on because it is a legitimate expense, and that money you can spend for your personal life however you want to, because the idea is that it's supposed to cover your vehicle expenses is what that mileage deduction does. So that's to cover gas, oil changes, brake pads, car insurance, car payments. That's what that mileage deduction is for. So take it out of your business and use it personally to pay whatever. You don't have to literally use it on your vehicle. You can use it to pay your health insurance, okay? But all in all, it's your personal money. You get to do what you want with it. So then, there is a place for other expenses that if you're just not sure where to fit it into it at, then down here on this form, there's a space for other expenses. So you can just kind of fill it out. And then when you go to your accountant will see that and they'll decide with their expertise whether they should put it into one of the categories above or whether they should keep it separate down below. So
Okay.
good question.
Okay. I do have two more. I think this one's a little shorter.
Okay.
do-
You don't know. Well, hold on. You don't know me. Your short question is the long answer with me, but go right ahead.
Short questions, sorry. We don't have a business account yet. Should we open one? Right now we just purchased a MacBook, and that was from our personal account. We're getting office supplies and other things that we getting ready to, get off the ground and go. We don't have a business account yet, and we want to get ready for taxes as well. Should we open a business account now, or are we able to deduct everything with our personal account as well?
Good. Have you, are you a sole proprietorship or an LLC or a partnership?
Okay, so we're LLC is my husband and myself. He is just a part-timer and I'm the full-timer. Not sure if that.
So have you officially formed your LLC?
Yes.
And did you form it with both of you as an owner of the LLC, or did you really just put the LLC in one person's name?
We put it in his name because he had a graphic design business prior to. So we switched the name to the photography, and I had an EIN question for that one now, since we have brought it up.
Okay, so
Yeah,
so it's in one person's name, and so you've already obtained your business name, you've obtained your EIN. Did you say you do have your EIN?
Yes, but that's connected to the graphic design, not the photography. We amended the name recently.
Oh, okay. But so the EIN that you have is the EIN that you want to have, right?
Correct.
Okay, so yeah, since you have your business name and since you have your EIN, which is all part of that LLC, then you'll be able to go to the bank and open up a business checking account. And the reason I asked that is because if you didn't have that information, the bank would not let you open up a business checking account. So it would be my suggestion that you do open up a business checking account and start using it for all of your business purchases from now on. Even if you personally got to take some personal money and put into your business checking account in order to buy those business things, I would suggest that you do that. The reason for it is anytime you buy things from your personal checking account for the business, it is still deductible. So you keep those receipts still deductible. However, if you ever do get audited, which is slim to none, but right now, but if you ever do get audited, the things that you purchase out of your personal checking account, they do have a right to easily disallow those those expenses because they're in a personal checking account. So to me, if you go out and you buy a tablet or a MacBook or something like that through your personal checking account, that's going to be a hard one to prove. Was that personal? Was that business? What is it? And so they could disallow it. With that said, I don't want to scare you away from claiming it on your business tax return. I truly do think that you should put it on your business checking account and deal with it in the future if they disallow it. But I don't think you have any trouble as long as you very, very soon open up a business checking account and start doing it right. Then when you're explaining it to the auditor, if you were to get audited, why you bought some stuff out of your personal, you'd just be like, well, hey, I didn't know what I was doing until Corey told me to open up a business check.
Okay, thank you.
You're
But the
welcome.
EIN doesn't change though. We don't have to change it, is what I mean.
The EIN.
Yeah.
So, okay, so you mentioned photography and then you mentioned graphic design, right?
Yes.
Okay. So the EIN is under the graphic design, right?
Right.
Okay. And what kind of business are you offering right now?
Photography.
Photography. but you want to do graphic design?
No, we don't do that anymore.
Don't do it anymore. Okay. Okay. Um, so the EIN is under graphic design, but you don't do it anymore. You're doing the photography. You changed the name for the LLC. But did you file for a change to your EIN? Did you change the business name with the IRS for the EIN?
Not yet. I was told I have to send a letter and tell them that I want to keep it under, well, not under the graphic design, but under the amended one, which would be the photography.
Yes, yes. And so you should be able to, yeah, that's what I would agree with you. You need to send a letter in there explaining what you want to do, that the business name currently is, yeah, I'm using my words, the business name for this EIN is currently graphic design. We'd like to change it to photography, and they should make that change for you. Could you open up a business checking account in the meantime? Yeah, I think well, you you may not be able to. I guess it depends exactly what the bank asks for, because if they ask for the EIN, which is under graphic design currently, and then they also also ask for like the LLC business name, and that's photography. They're not going to jive together, so they may not let you open it. You have to just try and see.
Okay. Okay. So I guess if we were offering both services, it would be okay. But because it's just one, it's not.
Right.
Okay.
Yeah. Yeah, if your business name included the photography and the graphic design in it, and they were all the same name under all these different registrations, then you'd have no problem. But since they're sounds like they're separate now, different business name and such, that causes a little problem until you get your EIN fixed. But get that letter mailed in. I mean, get it mailed in today or tomorrow, and at least it'll be in the process. Now,
Sounds
your next question was about it sounded like you were asking like about me doing taxes, things like that. So I'm not here as an accountant to do your taxes. I work for the SBDC, and so the SBDC does not do taxes, doesn't sell insurance, doesn't represent people legally, things like that. The Small Business Development Center offers their services at no charge, and it's business consulting services, education resources, things like that. And there are 15 SBDCs throughout the state of Pennsylvania. So be sure to reach out to your local SBDC for business related questions, including tax questions. With that said, though, if your local SBDC is not able to answer your tax related question, then feel free to reach out to me, and I would be glad to answer your question. I just don't want to, we have our territories, and we respect those territories because we're busy enough in our own territory. And so I don't want to, be taking work away from another SBDC consultant in your territory. And so from an accounting standpoint, yeah, I'm not here today to take on, to do your taxes per se, because I'm an SBDC consultant. I have all the accounting experience to be able to bring to the table for the SBDC.
Thank you so much. Thank you.
You're welcome. Okay, we have about a minute left. Any other questions? I'll open it up for one more question from somebody.
Yeah, hi, Corey. This is John. A quick question. I'm thinking about starting to pay for referrals for my recruitment business. If I sign somebody up and place them, maybe giving a small flat fee to someone that referred that person to me. Is that a deductible expense? And where would I report it on this expense section?
Yeah. Yes, so you can do this, and you're probably looking at putting it under commissions and fees. Box
Okay.
12 is where I would be putting it at. And you'll want to keep track of that, because and I'd have to look up the exact rule on this, like for paying for referrals or commissions, things like that. In my mind, when you're paying a subcontractor, also known as an independent contractor, also known as a non-employee, but they're working for you, then if you pay them $600 or more for the year, you have to give them a 1099 NEC.
Right.
So for something like this, you're going to be sending out a 1099 to those that you send a referral fee to. But is it $600 or is it a different dollar amount? I do not know that answer right now. If you can't find it by searching, then feel free to email me and or email your local business consultant, and we can see if we can find that fee out, that dollar amount threshold out for you. So yes, it is an expense, but then it becomes income for somebody else that they may have to claim it on their tax return.
Great, appreciate it. Thank you.
You're welcome. You're welcome. Okay, well, everybody, thank you very much for tuning in to Tax Talk with Corry. I hope that you learned something today, and we will be back here next month. Keep an eye on your email to see when we are back. There's a chance that the date could get changed, so I really don't want to throw the date out right now to you, but it will be on our website, and I'm sure you'll see it in our newsletter and in your email. So check it out, and we'll see you back here next month. Take care, everyone.